please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Taking Stock. What a week it has been for the markets, really. Gujarat elections take a center stage on Dalal Street. It was quite a good rally towards the end of it, thanks to those exit polls. Though the indices, of course, did come off the highest point of the day on Friday. Now, all eyes on the actual numbers, which would be out on Monday. Whether or not they will actually tally with the numbers that have been thrown up by those exit polls. Hello and welcome to Taking Stock, the election special. I'm Surbhi Upadhyay, and with me as always is Anuj Singhal. Anuj, quite a roller coaster. I don't think this week was for the faint-hearted, was it?
It wasn't, even though by the end of the week, you know, Surbhi, it will look like the market was flat, 0.5% on the Sensex and Nifty, down about 0.5% in the mid-cap. Trust me, you know, either if you're an ace trader, you would have made a lot of money this week, or you would have had your trading account busted this week. It was that kind of a week. And as we discussed, there were too many variables. You know, on Friday, we only spoke about exit poll, but before that, the Fed move, crude oil went to 65, back to 63. Global cues were all over the place. On Friday, they were down. Advanced tax numbers. So all these cues. My sense is that the near-term move, and I want to make a distinction here, the near-term move, Surbhi, on the Gujarat outcome is now priced in. And this is, we are assuming that exit polls are right. That is a big if. If that's not the case, then of course it's a completely different dimension altogether. But if the actual results match exit poll, in that case, the medium-term to long-term outlook for Indian market becomes very strong because economy-facing stocks will start to do well. You'll see a lot of reform move. You'll see a government going all out. That's my sense. And also one more thing. This week, what was interesting was that the leadership was back with stocks like HDFC Twins. HDFC Bank made a new all-time high in trade. HDFC was nearly there. I think the market would like that. You know, when strong stocks, HDFC Twins, Maruti, they make lifetime highs before the market does. It's a matter of time before the market also does that. So perhaps next week we have a date with all-time high.
Okay, let's see if that can actually come through. We've got plenty to talk about on the show. It is indeed a packed 21 minutes and lots of big voices. Andrew Holland, CEO of Avendus Capital Alternate Strategies, will be joining in to discuss the election impact on the market and the way forward. You will also hear views from the likes of James Sullivan of JP Morgan, Kathleen Gingold of Kartika Capital, Samir Arora of Helios Capital, and Jeff Chaudhary of LGM Investments. And as always, we will, of course, have our technical expert, Mitesh Tucker, joining in to help us understand the trading print for next week and a couple of interesting ideas.
Oh, yes. So joining us on the show then to discuss the market, of course, we have Andrew Holland, CEO of Avendus Capital Alternate Strategies. Andrew, always good talking to you. So, of course, you know, you have seen many elections. Sometimes they have been binary events. Sometimes we just take them in this, you know, our stride and move on. Your thoughts on how important the Monday outcome is from markets' overall health, and where do you see this market moving from here?
So, assuming that the exit polls were correct, and unless there's a huge positive above those kind of polls that we saw, then I think the market pretty much is kind of saying, you know, we're happy with what's happened. I think the good news is, if those figures are correct, is that you know, it's a kind of vote for Prime Minister Modi and his reform process, particularly in Gujarat, where, you know, there's a lot of noise around, you know, being one of the hardest hit, particularly with GST. So, you know, that's what foreign investors will take cues from and feel that, you know, the continuation of a strong government will be there. Of course, if the polls are wrong, then it would be a huge negative shock for the markets. But I'll work on the basis that the polls are right, but the market's probably priced most of that in now.
Okay. So, Andrew, to expand on that point further, I mean, if the final result on Monday is very similar to what the polls have thrown up, then what for this market? Do we go back into a consolidation range? Or do you actually see some triggers on the horizon that could help us take out the previous all-time high?
I think we go back to the global cues, and you know, the global cues, as we've known for some time now, is all about liquidity. And despite, you know, interest rate hikes in the US and elsewhere in the world, you know, it hasn't really impacted either bond yields or markets. So As long as the global factors are, are still positive, then, there's a real possibility we could try and test new highs. That said, I don't like liquidity-driven markets, so I'm still nervous about them. But until some trigger takes global markets down, then we'll continue with this happy Goldilocks scenario, and obviously we're all in the kind of Christmas spirit now. So we might see a reasonable run towards the end of the year. I think going into 2018, I remain more optimistic on earnings growth, and I think that's what will keep the markets kind of held up, despite global cues, maybe kind of taking markets down in the short term. So I think, again, I'm kind of, in that kind of middle road of very short term. I still feel nervous with liquidity-driven markets, but more in the medium term, I'm more enthused by both global growth, in the world, and also earnings growth in India. So you've got to try and marry those two. But it's been, I was listening to what Anuj was saying in terms of this week's been a very difficult week. And maybe we're just going to face a few more difficult weeks going forward until we get the catalyst, which, fundamentally moves the market higher, and that has to be earnings growth.
Oh yes, of course, for now the market would be betting on that Santa Claus rally as well. But Andrew, in that case, how net long are you right now? Are you 60% long, 70% long, or are you looking to add some more shorts? Especially as we head into the new year.
No, we're pretty much towards 45–50% hedged. Obviously, we took out, as a lot of people did some time ago, some protection against the kind of possibility of more negative results coming out of the voting, but that seems to be now behind us. So I think until some catalyst globally takes us down, which there's been many of them, Anuj, as you know, and nothing seems to get us away from the buy and dip strategy. So until that does, we just have to go with the momentum, and the momentum is still very strong. And as I said at the beginning, if this is a vote for the BJP, then I think foreign investors will like what they see, because it's the continuation. And going forward, I think what we're all expecting next year is the government to focus on rural spending along with infrastructure spending, and that should be a good catalyst for the economy as a whole. So we think earnings could grow at around 15% next year, which is probably what was going to happen before demonetization and before GST. So I think we were just going back to a normal kind of growing economy, and the earnings should show that as well.
Andrew, then how are you playing the impending infrastructure recovery? What kind of companies and stocks are you looking to buy?
No, but unfortunately, they've all kind of run up quite a lot, actually, ahead of it all. So, we're sticking to our kind of strategy, which we've been playing throughout, which is the private banks, FMCG, and affordable housing. And I think those are the three sectors we like. And add on to that, obviously, the kind of the auto sector as well. Selective autos. And some of the parts players, and that's how we're positioning the portfolio, for next year. I think, I don't really want to play the infrastructure, so high, because, when orders come, they don't get executed for some time. So it's just a help for the buoying of the economy and the good factor feeling that we'll have. But against that, we are going to be challenged by higher oil prices, higher inflation, higher fiscal deficit, GST, which is not revenue neutral. So there's lots of negatives out there as well, which can play out once we see any correction.
This auto rally has been phenomenal, Andrew, and essentially you can boil it down to maybe the top passenger car maker, 2 or 3 maybe two-wheelers, but valuations, how can you justify some of these stocks now trading at 35–40 times, essentially getting almost FMCG valuations?
Well, it's one of the few sectors where you're going to see continuous growth. you know, despite, you know, where we are in the economy at the moment, and we're seeing that. So it's a good long-term story. And unfortunately, you know, there's certain sectors where valuations are still very high, say infrastructure in some of those companies, where, you know, we're not really seeing any kind of uptick in their kind of earnings. So, you know, there's a dichotomy between the two, but everyone's saying, okay, well, I know a Maruti, for example, is going to do well because of these products and what the, you know, the new models are bringing, and therefore I'm quite happy to pay that kind of PE. Whereas on the other side, for some of the infrastructure companies, you're still waiting for the orders to come through, and then the execution, and then earnings. So, you know, there's I'd rather be on the side where I can see earnings growth in front of me, rather than I have to wait for it.
Andrew, where are you on this whole NBFC puzzle? Because with the bond yield moving to about 7.2, I think it even touched 7.3 during the course of the week, one is wondering how the impact is going to play out. Some of the companies we speak to maintain, you know, a strong face, and they say that margins won't be hit. But, I mean, what's your thought?
So I think, you know, margins will be hit marginally, but I think, you know, overall the growth in the sector will offset that. So I'm a little less worried. I think bond yields at 7.2 though does bring us back to you know, the banking sector and recapitalization and how that's going to play a part, because, you know, as the economy grows, we really need you know, the banking sector to be there to be able to buy into it. And, you know, apart from the private banks, you really don't have that. So I think until that changes, I think the NBFCs will continue to take market share from the PSU banks, who really don't have the capital to go anywhere at the moment.
Okay, Andrew, stay on. We have a couple of more queries for you, but we have to take a break. And, of course, we'll resume our conversation with Andrew Holland. Of course, after the break, Mitesh Thakkar will also join us and tell you what to buy or sell next week. Also, we'll take some of your Twitter queries. So a lot lined up on the other side of this break.
India has transformed herself over the last decade, and infrastructure development has been fueling this growth and economic activity, be it highways or expressways, or engineering marvels like flyovers and bridges, or tunnels facilitating connectivity. Toll-based public-private partnership projects make infrastructure development sustainable and viable. The rapid development in infrastructure lays the foundation, connecting people, connecting cities, driving growth across the nation, and connecting India. IRB Infrastructure Developers Limited, highway to growth.
Want to learn all about digital banking? Dena Bank presents Digital Pathshala. Visit your nearest branch from 16th to 20th December.
सेंचुरी प्लान सब सही मस्त रहे.
This week, NSE Finviz visits ITC's sprawling campus in Guntur, Andhra Pradesh, to engage with and educate young minds on financial planning. Watch NSE Finviz at these times only on Cnbc Tv18.
Presented by National Stock Exchange.
My guest today is a geek, a products guy, and someone who sold his startup at the age of 27 to LinkedIn and has now graduated to becoming the country manager for LinkedIn in India.
Catch me on CNBC TV18 Weekender.
Deal Street is back in action. Is that one big deal idea that can change your business forever? Separate the buzz from the real news by getting the inside story and stay ahead of the curve when big deals are in the works.
Big deal at these times only on CNBC TV18.
कल ये बोला, ये तुमने बनाया है. परसों भी बोला, ये तुमने बनाया है. इस घर में हम दो ही लोग हैं, फिर भी ये बोलता है.
Viva.
Still with us, Andrew Holland. Andrew, I held you back because I just wanted your thoughts on the other big cue that we are tracking, crude oil. Do you think it poses some kind of risk for our market, especially if it moves, say, above 70, 75, or do you think the market can take it in its stride?
In liquidity-driven markets, I know we'll take it in our stride. But to be honest, let's go back a few years. When the oil price was down to $20, $30, we would sit here and talk about what a great catalyst it was for the Indian economy and for the fiscal deficit, and that was a big beneficiary. We can't just say it's not going to be a headwind now, right? So. It only plays out when the negatives are there. So, the oil price will scare us when we're feeling, markets are going down. But I'm not so worried from an earnings viewpoint going forward. I'm more worried about the fiscal deficit and obviously, the impact it could have on some of the indebted companies. But the good news is that India's spent the last few years trying to fix the balance sheet. So, less worried than I would be 2 years ago. But, we think the oil price is going to 70, and I think that would be enough for the markets to, if not correct, at least not go up.
Okay, Andrew, have a good weekend, of course. Thanks a lot for joining us.
And you, thank you.
And, of course, in case we don't talk before that, wish you Merry Christmas in advance. Let's now invite Mitesh Thakkar for his technical view. Mitesh, thoughts on the volatile week, and by the end of the week, did you get a sense that the bulls were in control or bears were in control?
Good evening, Anuj. I think by the end of the week, definitely bulls possibly had an upper hand. But what is more important, and if you were to just stretch the time period more than the last few days, I think since July, when we peaked out at about levels of 10,450, 500, I think what we have done is broadly a range. The market has neither shown appetite to go below 10,100 decisively or the trigger to get past 10,450, 500. So I think that kind of range might continue as we head towards the budget day. So every time you can get a intraday reversal from the lower end of the range, which happened yesterday on Thursday's market, and you try to go long over there and try to sell close to about 10,450, 400 odd zones. Even go for short positions if you get signals on the upside. So I think that's the kind of market we are into. It might stretch for another few weeks. Broadly on the few weeks basis, that's the view. But otherwise, on a short-term basis, I believe that we've kind of reversed from the lower end of the range. We might be as well heading towards the upper end of the range, and that kind of movement might play out in the next 3 to 5 sessions.
Okay, in that case, Mitesh, I'm guessing you have a couple of buy ideas for next week?
Yeah, that's the case. In fact, fertilizer stocks had a good price and volume breakout today. Most of them were buzzing good price patterns. GNFC is what I've picked up. It's a buy with a stop below 465. Look for targets close to about 520. Amongst the metal names, which were also very active, Hindalco appears to be giving a good reversal after a correction. So buy with a stop at 238. Look for a first target of 250. And a slightly positional come accumulation call on Mahindra & Mahindra, which on the longer term charts is looking very promising. So accumulate in the range of 1480 to about 1460. Keep a stop at 1430 and look for 1580, 1600 as your target for the next 2.5 to 3 months.
Mitesh, any thoughts on, particularly some of the PSU bank stocks which started getting weak towards the end of trade on Friday? I mean, the kind of sort of break that we were seeing on a State Bank of India, where does that leave us with respect to next week?
In fact, maybe it's one packet, which after the demonetization gains, has kind of corrected and has yet to show any appetite of reversals after hitting the immediate support zone. So State Bank of India in the last 2 weeks, on multiple occasions has hit about 308, 306, but not given a significant reversal from there, barring a mild bounce back. So maybe, we'll observe them closely for the next few days. In case they don't break the support, eventually I would believe that they should resume some kind of an uptrend. But for the time being, I think they are very close to their supports of around 2-3%, and that's the case for most of the PSU banking lots. So I would expect pray for some kind of a reversal. But if that doesn't happen, then I think it could be dragging the bank nifty as well as general sentiment on the street.
Okay, Mitesh, we've got a couple of viewer queries for you coming from social media. First one is Romesh, who has a query on BHEL. He's got 1,000 shares. He wants to know if he should buy more or exit. We really request our viewers to give us the price at which they've bought these shares. Otherwise, it becomes very, very difficult to give a very generic, general sort of an advice. But anyway, we don't have his buy level. So generally looking at the chart, it's not been the best of stocks for the year 2017, Mitesh. What would you say?
Yeah, I think it's not the best of the stock in the last few quarters, and I think there's no sign of that changing either. It might give a trading rally to about 100, 110 on the upside, and that should be it. So in case if the purchase price is within 10% or 10-12% of the current market price, I would suggest an exit. I would again suggest shifting into a stock like Mahindra & Mahindra. A couple of mid-cap IT names look very promising. Stocks like Mindtree, Sonata Software, etc. I think shifting would be a good option.
Okay, fair enough. Let's move to the next query. Twitter user Chandra has bought 1,000 shares of Rain Industries at a smart price. 160 rupees is the buy price. He wants to know about the outlook. What can he expect over the next 6 months? Now, these have been gravity-defying stocks, as we all know. The good thing is that he got in a little early, Mitesh. But Rain Industries, do you get the feeling this humongous rally is stalling, or should he remain invested?
In the short term, yes, Surabhi. I think it's now getting into a range closer to about 385, 400 on the upside to about 340, 330 on the downside. I think last one and a half months have been spent in that range, and I think clearly after getting so overbought, I think the stock needs to settle down for some time. So I think that activity is still on. In case he has some kind of time horizon which is more than about a few months, I would suggest keeping a hold position over here and trail your stop loss about levels of 325. As long as that is not being broken, the medium to longer term trend will remain on the upside, and eventually that should lead to a breakout beyond levels of 400, which could see 450, 500 being tested very easily. So it might take some time, some consolidation, but I think overall trend remains on the upside.
Okay, the last query then. Twitter user Arvinder has this question on Aditya Birla Capital. He is holding 260 shares, bought them at a price of, I think, 205. And he wants a view on the stock. He is actually willing to wait even for the longer term. So wants to know what to do. Mitesh?
I've not been really tracking the stocks, unfortunately, so very difficult for me to comment on this one. In fact, I really don't have a view on this one.
Okay, fair enough. Not a problem at all. Thank you very much for taking all of the queries and giving us your trading ideas and picks for next week. Mitesh, have a good weekend. We will see you with the markets on Monday. Well, with that, we are going to wrap out on this edition of Taking Stock. Thank you very much for being with us. But as promised, we will leave you with some big voices on the market on what the Gujarat elections and the verdict might mean for Dalal Street and the way forward.
If you see the BJP perform weakly in that election, then we do see the potential increase for overall policy risk. It's interesting, if you look at the impact of state elections on overall equity market performance, if the governing party performs strongly, that does give them greater scope to push through policy initiatives, and you do see equity markets respond positively to that. And the reverse is also true. So we are very closely watching the Gujarat elections. BJP has ruled Gujarat for over 20 years now, and so the status quo environment will be expected, and so we don't necessarily see that as a positive driver of equity market performance.
We are very long-term focused, and we really do believe in the long-term secular story of India. We don't change the portfolio very frequently. Clearly, the Gujarat elections are very important and would have implications in terms of our beliefs, whether the reforms that Modi has started will continue or not. We don't think he will lose or BJP will lose the Gujarat elections, but clearly the volatility could be higher going forward if there is more uncertainty over the, political capital and strengths of BJP in the coming state elections.
It's actually not a bad outcome, because you can say that after 22 years you won again, and elections are tough and things like that. So in the end, I also think that actually if you look at it for 2019, it doesn't matter to the market that whether the wins are 300 at that time instead of 280. What if they're 250, 240? In the past we've had with 160 a PM, and so as long as the BJP and Mr. Modi is there, how will it matter actually if it is 20, 30 seats less, let's say? So that's why I think that there's no need to draw massive conclusions if it is a victory of sums.
Politics tends to have a short-term impact on the markets, and longer term, it's the companies that you invest in rather than the political. Having said that, I suppose in a perverse sort of way, it would have been quite good if there was a shock. And the reason for that was not because I'm either a supporter of the BJP or Congress, is it would have probably led to a market correction, and it would probably led to some stocks coming back to better valuation, which would have given us a sort of a better opportunity to add to our positions. If they do well, as the polls indicate, I think certainly the people who've been sitting on their sidelines with cash, and really I mean domestic mutual funds more than anyone else, I think they'll take that as a sort of a good green light to add to their positions in the market at this point in time.